Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for August the 3rd, 2011. Now, our first trade for tonight is going to be in the September E-mini corn futures. Now, what I've brought up here is an interesting correlation here. What I've got here is the mini corn and the S&P 500, and I've split the screen here so everybody can see this. Now, this is a trade. Normally what we see is equities down, corn up. That's been pretty much the regular correlation that's been happening over the last, I would say, 3 months or so. So looking at this, we can see that the equity markets, specifically the S&P 500, really took a beating today, but yet corn had a huge rally. So what we're going to do here now is we're going to continue to play this because obviously the equities have further downside potential here. This would suggest that we have further upside potential on corn. So now let's bring up our normal screen. Now, assuming that this is correct and corn is going to continue to rally, we can see our predicted true strength indicator has crossed the trigger some time ago, continues to move up. Our predicted MACD is just now breaking above the zero line. That's a very bullish sign. Our predicted short, medium, and long-term differences, they're turning up also. We can see here our triple EMA cross continues to hold despite 2 down days, or about a day and a half being down. Its vantage point is refusing to put a sell signal out on these corn futures. So from here we can identify our key support: 680, 684, 691 with a close of 711. That's good. Everything here looks good. We then want to break down our crossovers here to some degree and see what's happening there. Now, looking at our short-term crossover from vantage point, we can see on the short-term crossover here that we're again looking still somewhat bullish, I think. Now again, we're just gonna move this short-term crossover. We can see there that we've crossed back over to the upside, bullish sign. We're going to look at our medium-term crossover. We're just getting ready to cross that trigger, so that looks good. And then our longer-term crossover, still not crossing back up to the upside. So from here, we also want to look at what is Vantage Point predicting on a high-low basis. You can see our high-low break. We've broke the Vantage Point predicted high 2 days in a row. Very, very bullish on this one today. So from here, we're going to now go into our daily report from Vantage Point and see if we can fine tune this entry point. Now, looking at things tomorrow, we've got 687 and 714. So obviously 687, we've already identified that we have some decent support down there with the 18-day predicted moving average from Vantage Point. So we're going to use that as a pivot point to get back into a long trade. Our neural index is up. We've got a little bit of a concern here on this predicted long-term difference from Vantage Point, still in the negative. That is a concern, but we're going to play this bullish. We're going to play the bearish equity and bullish corn. That's what this looks like to me. This is a play that I've one of the strategies that I've played for several years. It's been quite good, so we're going to continue to follow that. Now that's our first position for tomorrow. Now our second position is going to be in the Forex market, specifically the British pound US dollar currency pair. Now, we are going to be looking at a counter trend short position. I do not believe that the 18-day predicted moving average is going to hold. What we can see is we've come down and touched it 2 days in a row. We do have some support down here at 162.37, but under the current market conditions, the pound is unlikely to hold on to its gains. So what we're looking here is a short-term counter trend position. I'm going to bring this up so everybody can see this. We're looking at the short-term crossover from Vantage Point has crossed the trigger to the downside. Our predicted short, medium, and long-term differences are all pointing lower here. So from here, again, we're going to look at our medium-term crossover. It's getting ready to cross the trigger, but it hasn't completed it yet. Looking at our Vantage Point predicted high-low break, we can see we are consistently breaking the Vantage Point predicted low each day. This is another warning sign of a very bearish move coming. So, and again, I play these types of moves all the time, both with the trend and against the trend. But right now, I think we're looking at, with all the things that are happening in the U.S., believe me, the U.K. is just as bad, so is the Eurozone. And the pound is predominantly in a very significant downtrend against the dollar. It's not in an uptrend. Like I was saying in this week's Forex Weekly Outlook, I was trading the pound at $2.11. This thing has given up probably at one point 50%, almost 50% of its value. The pound is given up against the dollar. So we're staying technically with the overall trend. Now, going into our predicted high and predicted low for tomorrow, we have 163.68 and 162. Our plan for tomorrow is to sell into this area right in and around 163.55, 163.60. Any move towards this area, we want to sell this. Stops in this particular case, I would put them in the 164.90 area, 164.80. I wouldn't I wouldn't get caught up with a I wouldn't even attempt to trade these markets with a 40 or 50 point stop loss. That's a complete and utter waste of time. It's going to get knocked out in intraday volatility, and you don't want that to happen. So with our close today, we've closed just above the 163 mark, 163.01. We're going to be looking for a move up to that, and we're going to stay with the short-term crossover, the neural index, and again, the primary overall bigger picture on the British pound US dollar is still significantly down. So we're not technically counter trend. Now, again, the only thing that concerns me here is when we bring up the Vantage Point triple EMA, this is a bit of a concern looking at that looking at that support sitting at that 162.37. So we definitely want to exit our short position before that area, because we could see a significant bounce from that area. So we don't want to forget that. So those are the market positions for August the 3rd, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.